Oh, hi everyone, it's Susie again from Esoteric Trading Solutions. Sorry, I've been a bit tardy with sending out YouTube. So just like life just goes on and it gets so busy, and before you know it, time's got away and another month's gone and that sort of thing. So that's why life is so important. It's so short. Please be kind to yourself. Please be kind to your friends, your family. Please be kind to your animals, be kind to just pretty much everyone in the world. Just make this place a better world than what it is. So I thought I'd just do just a video on how can price go up just in relation to change in circulating supply, and a case study, say looking at XRP, for example. This is education only, so I'm not a financial advisor. I don't have financial advising qualifications. This is only education. I'm not saying to people to buy or sell XRP or any other cryptocurrency for that matter. So it's just purely education, as you know. So I've got the obligatory disclaimer there. I know it's boring, but I have to put that up. So if we look at, say, XRP, for example, according to Coin Market Capital, for example, total supply is 99.991 billion, and that total supply is obviously the total coins that were issued at ICO level in the primary market, the ICO market, less burned coins that we know about. And circulating supply is 39 billion or nearly 40 billion of XRP, which effectively is what coins are sitting in the public hands, what's circulating in the system at the moment and sitting in the public's hands, which is the secondary market, which is the exchanges, obviously what people are trading on the different exchanges, which is very separate to obviously the total supply. So if we look at circulating supply, obviously in total supply and obviously circulating supply, as I said, the circulating supply is the secondary market. So basically when you do an ICO, it's considered the primary market when the ICO and the coins, the outstanding coins, are issued on the primary market, and there can be pre-investors in that primary market that don't actually hit the secondary market. They actually hold those coins as a private crypto investor or a private equity investor, if you want to call it that, and those coins can sit within their their custodian, or they can sit on their ledger or whatever it might be. And basically the total circulating supply can be what was issued less effectively any coins burnt. So essentially, just to reiterate, that circulating is what's in the public. Circulating in the public domain is basically 39 billion odd, and total supply as according to Coin Capital Markets is 99.91 bill. Now I just want to go through what can affect obviously the difference between total supply to circulating supply, and I'm mainly focusing on what can affect circulating supply, and I think that's really important. And this goes for every cryptocurrency out there, but obviously I just want to focus on XRP at this stage. So essentially what we're seeing is the difference between total supply and circulating supply, and the main thing is, as you all know, Ripple holds roughly about, let's say 60 billion or so, and those coins are locked up in escrow. And generally what that means is escrow itself is a financial fund, or a lockup fund if you want to call it that, that's regulated by a third party with rules to when the XRP can be freed and traded. So say, for example, the owners of those coins have very strict requirements to when those coins can come out into the secondary market and when those coins can be freely traded. And often that escrow fund is regulated by a third party, which could be a custodian, a bona fide notified custodian. Pretty much, we've seen new custodians come to the market. It could even be like, for example, a custodian like Fidelity or one of the very large fund managers. So effectively, the coins that are in escrow, which is like a locked up fund, cannot be traded on the secondary market as such. And we know that to be the case with Ripple owning about 60 billion of those coins, and that's why the total supply is less the circulating supply is less than the total supply. So we know that the founders have strict requirements to when those coins can be obtained and when they can sell them. And it might be their KPIs, their key performance indicators. It could be their length of term, excuse me, within their stay at Ripple. They might have a 5-year lock-up period before they can sell the coin, subject to their own performance within Ripple, the business, which is really important. Also, what can affect the circulating supply, coins can be bedded down in clients' portfolios, never to see the light of day. Okay, so for example, where we see in, say, equity markets, for example, or even bond markets, the fund managers will have a core amount of holdings that they have within their portfolio. Say they've got $7 trillion fund or whatever, equity fund, and they may have Apple or IBM or Google as their core equity holding that never comes out of the portfolio. Basically, it sits in their portfolio and it never goes into the circulating supply because they don't trade that core, say, type A best investment stock per se. The same with the bond market. Now, the bond market, as a bond fund manager, as we would have, say, a bond fund, 12 billion. And obviously, we're never going to turn over 12 billion. We might turn over, say, $1 billion max, but obviously 11 billion is still sitting in the bond fund, and, it could be government bonds of the US or it could be government bonds of Australia, and those bonds never hit the secondary market. They don't get traded, and so therefore the circulating supply will be reduced by those bonds. Another reason why circulating supply can be reduced are coins are just lost. They're lost in the ether. People transfer stuff through, the exchanges, they don't have the right tag on or the right deposit code or whatever, and those coins are lost forever. And we don't actually know how many coins are lost forever in that circulating supply. Another reason that circulating supply can change is, again, people have lost their PIN numbers. It's been of note, people have lost their PIN numbers, and again, we don't know how much that is. Now, generally with circulating supply, coin capital markets don't adjust that circulating supply every month. In other markets, circulating supply is adjusted every month, and the exchanges will have those figures. So, for example, the equity market, if those circulating supply on equities changes, that will get updated in the circulating supply. Now, coin capital markets doesn't do that, and maybe it's because the crypto market is very young and still immature, but the circulating supply should be updated every month. We see that in the bond market as well. Issuers will send notifications out notifying the investors and the custodians exactly what the circulating supply is every month. And as I said, we do see that in other markets, other financial markets and fiat markets. So if we go to the next slide, number 6, circulating supply could be due to the hoarding of coins on the exchanges. The exchanges have a certain requirement of how many coins they need for their own client base, for their own, to provide the liquidity for their clients, and they may store, say, for example, XRP in their own private coffers. Okay, so as I said, number 7, the circulating supply should be updated as a minimum every month, but we know that doesn't happen within the crypto markets at this stage. Circulating supply can also be affected by the exchanges that have a base XRP or a cryptocurrency being XRP, and we know that to be the case. More and more exchanges are using XRP as the base currency to anything else. Now that means they need more supply to initiate a base currency, and they will store XRP. We don't know how much, but they will do that. Also, clients and banks and wholesale clients, exporters, importers, fund managers, banks, high net worth clients will store XRP. If we look at the banks, the ones that are using XRapid particularly, or some of the technical systems of Ripple that use XRP, will store XRP in their Nostro and Vostro accounts as a funding tool. Now, we already know that just the Nostro and Vostro accounts is a $24 trillion problem. Why it's a problem is because banks generally use foreign exchange. They go through the SWIFT system, as we've repeated time and time again, and the SWIFT system can only cash settle between 1 to 10 days maximum cash settle. And of course, if it's any currency that has to be from the US to the Middle East, it's going to take more time to cash settle because it has to go through correspondent banks. If they use Ripple's technology and XRP, they can settle within 3 to 4 seconds for minimum costs, like 30 cents for a $50 million transaction. If they did it through SWIFT, it would cost them thousands and thousands of dollars. This is cash settlement. SWIFT say that they can make payments immediately. That's fine, but payments are not cash settlement. Instant cash settlement where you've got the cash in your account straight away. And XRP and Ripple technology can do that. So that would cause hoarding and would also reduce the circulating supply. Of course, just people, me, you, everyone else that has XRP, we don't put it on our exchange. We don't leave it on the exchange. We'll put it on our Ledger Nano S. Now, the average holding, as we know, for XRP, according to the figures, is around 75,000 retail holding, and Ripple has over 1 million clients and growing every day, 1 million investors. So we know generally as a rule that some of that will not come out to the secondary exchange and it won't be traded. Another thing which I think is really important, and it would never surprise me if Ripple, the founders, did this, they can also buy back XRP. They have billions of dollars sitting in their Ripple bank account from all their technology that they sell to every client, every bank, every fund manager, every high net worth, every importer export. Ripple technology is for everyone. Don't believe anyone that says it's just for the banks. It's not. It's not a banking coin. It can be a government coin. They're talking to the IMF, they're talking to the World Bank, they're talking to everyone. BlackRock, biggest fund manager in the world. Again, Fidelity is going to have a crypto exchange. Fidelity are very smart operators. They've been in the crypto markets for, since 2015, mining Bitcoin. They know how slow it is to get a transaction to cash settle through Bitcoin or even Ethereum. So these sort of institutions that manage your superannuation, are very clever, and it would not surprise me if they had XRP as a base currency. If they have XRP as a base currency within their own crypto management and, trading or whatever it might be, or to their own clients, this will cause the hoarding of XRP and thus reduce the circulating supply of XRP coins. As I said, going back to number 11, the founders can quite easily buy back XRP, the coin. They can buy it back and they can cancel or burn those coins. Now, in the bond market, the equity market, or any fiat market, equities and bonds can be bought back by the issuer, very simply. And they use their own money on their balance sheet, like Ripple has got a lot of money, billions and billions, to buy back the coins from the secondary market and cancel those coins. Now, that would be massive, and they can do it. There is no doubt about it. Say we've got a circulating supply, as we know, of 39 to 40 billion. Ripple come along and they give, say, for example, 2 billion away to India, which they're talking about, and they come along and say, we're going to cancel 10 billion and burn the coins, and they'll spend their money doing it. All of a sudden, we see that circulating supply down to 29 billion. Keeping in mind that Ripple can fix a $200 trillion cash problem in the world. There's a $200 trillion cash instant settlement problem because no one can instantly settle in volume the way Ripple can with foreign currency. Also, added to that, there's a $1.4 trillion derivatives market, which also has a cash settlement problem because they use SWIFT. And as I said, SWIFT doesn't instantly settle cash instantly. Well, within 1 to 3 seconds or 1 to 5 seconds, big deal. So you can see where I'm coming from here. These are the markets that Ripple are going after. And also, they're also getting more and more partnerships in terms of the exchanges and more partnerships with clients of all sorts, whether it be FX providers, cryptocurrency providers, whether it be importers, exports, whether it be, the Asian Development Bank, whether it be, banks from Africa, whether it be anyone. Whether it be, the Bill Gates philanthropy fund, which is in the billions, and they do use Ripple and XRP. So again, these founders can buy back any one of these coins. Also, we know that every transaction XRP does, the coins are burnt, and that reduces total supply and circulating supply. Now, what I want to add to that as well is the turnover. The more turnover of XRP, the more burn is going to go higher and higher, because they're burning at the same time turnover is going higher and higher. Now, XRP, people have to keep this in mind, because it can settle within 3 seconds, you can still use the same XRP to do another transaction and another transaction and another transaction within a 24-hour period. So that, if we just said it's the same XRP, that is constantly burning all the time. So as the total supply gets smaller and the total circulating supply gets smaller, that burn rate is going to get higher just by the denominator of the circulating supply and the total supply getting smaller. Another thing that can cause circulating supply to change quite dramatically is the derivatives market. Now, I've mentioned this, 1.4 trillion derivatives are out there. And what we mean by derivatives are, you can have XFE futures. We see in the crypto market that people short sell XRP on margin. You can do it with Bitfinex, you can do it with CEX, an exchange, you can do it with, Binance. You can short sell XRP that you don't own. Now, in the derivatives market, you can issue as much as you want. The exchanges will issue as many derivatives as you as a client wants. As many futures, as many swaps, as many options, you name it, you can get it. Now, what that means is the supply of derivatives outpaces or is so much larger than the physical quantity of, say, cryptocurrency per se or XRP. So as I said, the derivatives market is a $1.4 trillion market and growing. And even if we assumed that, say, 10% of that derivatives market will come into cryptocurrency, that is a huge amount, and it will swamp the physical cryptocurrency that we hold in our wallets and on our Ledger Nano S's. You see what I'm saying? So, excuse me, if the derivatives market has short sellers, which we see with XRP it does, and the market suddenly keeps moving or it doesn't do anything, eventually these short sellers will get tired because they've sold the XRP they don't own, and eventually they will have to buy that back. They either close out their derivative contract with a buyback, or they can actually buy back the derivatives contract and then buy the physical XRP. Okay, so 2 different products, but it can also force short sellers in the derivatives market to come back into the physical market. Now, big fund managers will buy physical and they will also buy and sell derivatives, but there's only a short holding period for holding derivatives, short or long. They will come back to the physical contract eventually. And so basically, as I said, there's many different reasons for how circulating supply can change. And this is for all cryptocurrencies, not just XRP, but I really wanted to point out XRP. So what does this mean? Say, for example, we have a situation where XRP, we think the circulating supply, according to capital markets, is 39 billion or 40 billion. But all of a sudden it gets reduced by 10 billion. But we don't know about this, right? We're still doing what we do, and we still think, the circulating supply is 39 or 40 billion, because we don't see anything to tell us that, okay, just in terms of, the internet pages we look at and whatever. Assuming everything else is static and Ripple has, say, 100 clients, which is, not out of the realm, because this is true. They have 100 clients using Xcurrent, and say they have 20 clients using XRapid, and they're large clients. These XRapid clients, because they're using XRapid, will start warehousing XRP, holding XRP. So as I said, banks can hold it in their Nostro or Vostro accounts. Import companies can hold XRP. We hold XRP, you and me, the small retail investor. Also, exchanges that Ripple partners with will hold XRP because they want to provide liquidity to their clients, okay? And XRP being the most liquid cryptocurrency, the exchanges that Ripple partner with, and where Ripple is, they will hold XRP to provide liquidity for their clients. Also, hedge funds that use and invest in XRP and have XRP as a base currency to the hedge fund, and we've seen this with some hedge funds out there, basically they will hold XRP in their hedge funds as the core cryptocurrency. Okay, now we know that with some very large hedge funds in the States, that's what they're doing. And so they hold on to XRP in their hedge fund, whether their hedge fund's 100 million or whether it's bigger, and that will basically make up the core holding of their cryptocurrency fund. So with all this, we don't know the figures because they haven't been updated. All of a sudden, the 39 billion goes to 10 billion circulating supply. And we know that Ripple itself is fixing a cash problem of 200 trillion in the bond market, in the foreign exchange market, in all other fiat markets. Not talking about the derivatives market. So what does that mean exactly? What does that mean? So all of a sudden, we see, say, the circulating volumes reducing, and a part of that reduction in circulating volume has been some of these exchanges. So say, for example, Bitfinex has $1 billion of XRP in their exchange that they hold and they provide to their client base. And Bittrex, which is a partner of Ripple, has a supply of 3 billion. Bitfinex has a natural demand, say, for XRP in any one day. These are just averages to give you an idea of 800 million, say. And Bittrex will maybe have a natural demand on any one day of 2 billion. So again, on those figures, they have a surplus. But say the trigger is, and this can very easily happen, a large fund manager, an insurance company, a hedge fund, anyone, a large high net worth individual, not just a bank, all of a sudden needs to buy $1 billion in XRP. And they do it in the over-the-counter market. So you don't actually see it trading on the exchange where you've got the supply and everything else. They do it on the over-the-counter market with an exchange. They could do it with Bitfinex, or they could do it with Bittrex, for example. They have an account with Bittrex, and they go, right, we need $1 billion and we want it done in the over-the-counter market so no one can see us buying XRP, because we want to hold it in our portfolio as a core holding because it settles instantly. And if we use XRapid, Ripple, for any price change between the 1 to 3 seconds will make up for that price change. So they don't have any risk within that price change for cash settlement within the 1 to 3 seconds. So the $1 billion being lifted in the over-the-counter market, which is basically a contract done between the fund manager or the hedge fund manager with the exchange. And say they lifted $1 billion from Bittrex. Bittrex had $3 billion. All of a sudden, Bittrex only has a $2 billion supply of XRP, but their daily average cash needs for their clients and trading and everything else is $2 billion. So clearly, Bittrex now basically is short XRP. If their daily average turnover with their clients is $2 billion and they only hold $2 billion of supply on their exchange, they need to find more XRP. The first thing the exchange will do is they'll go to their clients who they know are big holders of XRP and show them a premium to where XRP is trading on the normal exchange. And that's exactly what we used to do when we're on the bond desk or the equity desk and an issuer wanted more money, or even on the term deposit desk. We would show them a higher rate for something to get their money than the market knows, so that we could get that money in quietly. Rather than paying all the client base, we'd show one client that had a lot of money a premium to the rate. Say XRP is at 45 cents, we might show them 50 cents. Say the term deposit rates are normally 4%, we may show the client 6% to get more money in by the volume and do it quietly, just with one client, so the whole world doesn't know that we need, money, and we need XRP, or whatever it might be. We need XRP. So Bittrex will go to their clients to try and find that XRP that they've been lifted over the counter by their large client. And note, the price on the exchange has not moved because they show an individual client with volume a premium price. So they go to their client and they're trying to find XRP and they're showing them a premium price. They're unable to find, much. Say they don't find a lot. They might find 300 mil. So they've still got this shortage in XRP. So Bittrex decides, right, we're going to do an over-the-counter with Bitfinex of 500 million XRP. We're going to lift them 500 mil of XRP. What this then happens is this only leaves Bitfinex with 500 million out of the bill. And remember, they needed 800 million for average turnover for their own clients. Okay, Bitfinex will do the same thing. They'll try and find more XRP through their own clients. And all of a sudden, we see that the exchanges are running lower on XRP because, the XRP has been lifted, or it's been hoarded, or it's sitting in a large fund's core position, and it's never going to see the light of day. So what we suddenly find is XRP, say on Bitfinex, because they can't get any more XRP from other exchanges, we start seeing Bitfinex trading XRP at a premium, say at 0.50, 0.501 or something. Now we saw that the other day with Bitcoin, okay? Bitfinex was trading Bitcoin at a premium compared to other markets because obviously it was short and it needed Bitcoin. So what we find is Bitfinex will offer 0.50 and 0.501, but all the other exchanges will still be at 48 cents. And so technically speaking, there's an arbitrage there. An arbitrage of XRP, the same product, but in different exchanges. So I would buy, from Bittrex, say at 48 cents, and I would sell it, at Bitfinex at 50, and they will get, my XRP. But you see what I'm saying? With this, the price will start moving because the circulating supply is reducing. And reducing quite substantially, say 10 billion, for example. So prices will start rising just on the reduction in circulating supply. All it takes basically is one large client, and this is not inconceivable, and it can happen, and it will, to start storing XRP. It may even only take 1 billion. But it will start with one client storing XRP because it's their core holding, no different to an equity fund holding Apple, no different to an equity fund holding Google, IBM, GE, whatever, a core equity holding, which will not see the light of day. And that will start putting pressure on price. Also, we don't seem to have any transparency of circulating supply. As presented by Coin Capital Market, because it's not updated monthly like other fiat markets. We need to try and find that circulating supply elsewhere. There's another true case as well. a very well-known rich person, allegedly did die, of course, very well-known, connected to a large bank, of course, and allegedly, one of the largest custodians in the world, allegedly owned 3 billion of XRP. Apparently with his death, which was horrible, apparently no one had his private key except himself. Now, 3 billion XRP allegedly has been taken out of the circulating supply forever. So technically, if this is true, that this person owned 3 billion of XRP, then we already know that the circulating supply of XRP is now 36 billion. And the point is, if circulating supply reduces, and it reduces very quickly, and it can, because of all the different networks that Ripple has, this just by circulating supply reducing will put pressure on the price and start pushing up the price. This is for education only, food for thought, guys, because the thing is, we actually don't know what is the true circulating supply. All I can say is, with a valid assumption, given everything that's been happening with Ripple, which I won't go into because you all know that from verbatim with other people out there, other YouTubers. The reality is, the true circulating supply, what I can say is yes, and ultimately this will mean that there will be a rise in price, no doubt. This is my personal opinion. I'm not a financial advisor. It's food for thought. It's just for education only. And, please take it as that. That's my disclaimer. It is just for education only. I'm not a financial advisor. But anyway, guys, I hope this helps. Just food for thought. Please look after yourself. Be kind to yourself. Be kind to your families. Be kind to your friends. Be kind to everyone. And please be kind to your animals. And please look after yourselves. Life is very short. And we never know when we're going to be around. Thanks, guys. Speak to you soon.